the resurgence of meme stocks, meme 2.0. Is there a word for what's happening this week or what happened this week? No. Okay. I would like to talk about it, if you do not mind. I watched a little segment earlier today on it, and I was a bit disappointed, frankly, in the positioning of financial journalists on this particular topic over the last couple of days. And I didn't really want to talk about it because so many people have sort of almost driven this one into the ground, but I had to, because it's like, have we learned nothing in the last couple of years? You know, this is the line I keep hearing over and over and over. Keep positioning those that are trading either GME or AMC as stooges, though victims who are being taken advantage of because they're trading some instrument that has departed from fundamentals. And that means the retail trader who is participating in this thing is stupid and must be protected from their own stupidity. It means they don't understand markets. So I'd like to do a little example, gentlemen. Do you mind if we have some fun here? A little group participation?
Let's do it.
Group participation,
Let's
Tony?
do it. Let's do it.
Gentlemen, I have in my hands a very cheap umbrella. What I would like you both to do, as old traders and market makers yourselves, is just to, in your minds, think of a number. What do you think the price is of this umbrella? We're going to have a little bit of fun. Again, very cheap, little handle on the bottom. It's a Japanese product.
I'm going to say...
Get a number in your mind. You both have a number?
Yes.
Yeah.
Tony, you got a number?
Yep.
All right. What are your numbers? What do you think this thing costs in the market?
$6.99.
$4.99.
Very, very close. It was $3 Sing, so it's even cheaper than that. Okay.
Okay.
Now let's do something fun. Tony, you're about to go outside, and this is the only umbrella. And your good best friend for decades, Tom Sosnoff, just happens to have this little umbrella in his hand. Tom Sosnoff, what is the price that you are now willing to sell the only umbrella to your friend? What's your price now, knowing that you just guessed that this thing was worth $4? What's your price you're willing to sell it to Tony for?
Do I know what it actually costs? Did it cost $3 or
Does it matter?
Well, he wants to, and it's raining.
And I just did my hair.
And it's raining.
Yes, he just did his hair. He's going to.
I just did my hair too, Tom.
I mean, if he's bugging me and I'm feeling like a little like he's being annoying, I'm gonna sell it to him for $20. But if he's like being kind of normal and I'm feeling like in a very giving mood,
10?
I'm thinking at least double whatever I paid for.
Yeah. $10 or so. You're not gonna do it at number $8. Yeah.
Yeah.
Right.
$10 I can let it fly.
You know what? So what I just found out is there's a $10 surcharge for me being a little ornery with you. I could pay that. I could afford that. I'm going to do that for the rest of my life.
It's not a $10 surcharge. It's like a 200%.
You got to do it as a percentage, Tony.
It's like 200%.
That's right.
Yeah, you got to do it as a percentage.
Yeah.
What we just did was a fun little experiment in markets and liquidity and supply and demand and departures from fundamental value. And that didn't make Tom a stooge, and it would make Tony a stooge for buying it if he needed it or wanted it for whatever reason. The point is that there are many factors that go into short-term price swings. What is it, Ben Graham, that says in the short term the markets are a voting machine, in the long term it's a weighing machine. And I think retail participants in the short term and the long term can be aware that you could have market structure issues, you can have high short interest, you can have gamma, you have option market derivatives playing into this. My point to set this up, and then I'll take this in a different direction, is we still have journalists that are asking questions that frame participation in names with high volatility or 300% implied volatility in a way that makes anyone participating as an idiot. And I just think to me, it shows a lack of understanding by the journalists more than it shows a lack of understanding by the participant. So that's number one. Number two, what I would also say, and if you guys don't mind, let me get on my soapbox and I'll let you react. Number two is what you end up seeing during these meme stock phenomena, I suppose, is you end up seeing pandering. So I want to say, financial journalists, stop treating retail traders like they don't know what the hell's going on. And then those with a bias or with an incentive, stop pandering to people. If you love somebody, you don't tell them what they want to hear. You tell them what they need to hear. And what they need to hear is this thing with the 300% implied volatility. You tell the risk as well as the reward. You talk about Adam Aaron, that he was the same guy running this company well before 2019, running this company effectively into the ground, making a laughing stock, not necessarily adjusting to the future of digital media. The same guy you called the king of apes 2 years ago, you're now furious at because he is doing what some would call the prudent thing for management to do, which is new issuance. He is issuing into you with every time you take this stock higher, him, that CFO, and that board is issuing into you. And you haven't figured it out yet. Now you're furious because it's a $5 stock and you want the same upside that GME has, but you don't have the same structure as GME. This is a Me Too trade. AMC is a Me Too trade that people find because it's cheaper alternative to GME, but sometimes you shouldn't buy the free sushi. And I think in Adam Aaron's case, it's like you either, what is it? What's that saying from Batman? You either live long enough or you die soon enough to be the hero, or you live long enough to be the villain, something like that. I think Adam Aaron has become the villain of this story, rightly or wrongly. And I actually think he deserves the villain tag. And I'll tell you why. Adam Aaron, if you are a prudent, you're a prudent risk manager, you're a prudent executive, do you issue into these people? Sure you do. But you don't talk out of both sides of your damn mouth. On one side of your mouth, you're not issuing into these people. On the other side, you're talking about a fight against the short sellers. You're talking about, you're making them feel like they're going up against some stupid cause. No. What's going to happen is either the short sellers are going to find the long-term value of this company, or the CEO and the CFO on that board is going to help you to find the long-term value of this company. But one way or another, it will find a supply and demand equilibrium. And I think when all the dust is settled, Adam Aaron to me is one of the biggest grifters of the whole meme stock phenomenon. He was then. And if you've been listening to any of the content that me and Ryan Grace or me and Chris Vecchio have been doing over the years, I've said the same thing. And it's very unfortunate. I'll tell you why. Because this had the potential for retail traders. They owned over 80%, maybe even more at one point in time, of this company. You could have been an active investor. You could have petitioned for change in that company. You could have demanded for a new business plan, a change in direction. Instead, what did you do? You let the guy accept Dogecoin as his new, innovative plan. You let the guy show UFC fights there once or twice. You let the guy start branding his own popcorn as if that's going to turn this company around. You let him do a bunch of crap, and you didn't demand accountability. And ultimately, you don't demand accountability, and you're a shareholder. It doesn't matter if it's one share, a million shares, 1% of the float, or 10% of the float. You demand accountability. And I feel like this story is full of perhaps an investor base that didn't demand accountability. They wanted to play the market structure game, but forgot at the end of the day, you got to have a product worth buying. And
so I don't understand. I don't understand what you're. I mean, it's a crappy company. It's a $4 stock. Who gives a crap? I mean, I don't know what you're.
Yeah, but how many lifelines does a crappy company get? You're giving this company lifelines, and with that lifeline, Tom, if you came in and you rescued a distressed company, how many times has a company come to you with a decent business model, a decent management team, but they needed a little bit more time to make things work. They need a little bit more capital and perhaps a little bit more strategic direction. I'm sure a couple of times along the way, you've made that bet. But in order to make that bet, you probably said, look, you got to make some changes. And these are the changes you got to make in order for me to put some chips on the table and perhaps to bring some new investors to the table. That didn't happen in this story, Tom. What happened in this story is retail traders gave this company new life, and no meaningful changes were made other than, the cap table changing a bit. And that's my point, that this story could have been a good one. It could have been a story of retail traders demanding accountability and forcing real change, not just leaving this to, hedge funds and active investors to force real change. This could have been that story.
I think there's so many other problems here. And I would, obviously the board has a certain responsibility to the shareholders, and they've obviously, let let the shareholders down. But again, I think they've already, it's a $4 stock. I don't know why why you even care. Do you know what I mean? Like, just let it die.
Why you even care?
Let it die on its own. It's just the only reason you're talking about it is because it was in play early in the week, and for 1 minute it ran to $12, which was a joke, and because he was
playing it as the proxy to GME because of the
no, I understand. But what's so interesting is like people think that it ran to $12 and GME ran to $70 because there was some crazy fundamental. None of that. It's just this was just it's a little bit of kind of like a Ponzi scheme, and it truly is just it's a meme stock pump and dump. So it's just don't get me caught. Like let me be the first one in and the first one out, or let me be the second one in and the second one out, but I don't want to be the 10,000th one in and the 10,000th one out. And that's all it is. And everybody knows the game that they're playing. This is not nobody that traded AMC from the long side this week should be in the least bit surprised. Like even in this office, I saw a couple people that, I will not disclose the names, but a couple people that are on this network, they're like, screw it, I'll buy some AMC. And the whole reason was maybe there's a greater fool out there than me.
That's right.
And maybe we can
the hot potato kind of thing.
Yeah, hot potato.
And it worked out.
And it worked well for one person, worked out for another person. It didn't. But my whole point is, if you thought about holding this for longer than 2 seconds, like in 2021, there was a crazy phenomenon, and people that bought the stock on the way up were able to make hundreds of dollars, like crazy amounts of money, or millions of dollars, depending on the size. But that's not going to happen again. And what happened here was just, I'm surprised it wasn't. This was the Eastman Kodak moment for me. I'm surprised it wasn't 30 seconds long rather than 48 hours long.
I can't believe it was the second time. I've said it, numerous times. I can't believe we did this again, or the public did.
Yeah, we both thought it was going to be same day, intraday.
Yeah,
it took 2 days.
I don't understand. How are you? I don't understand. You're refuting what I'm saying. I don't understand.
No, I'm not refuting what you're saying at all. What I'm only saying that I feel like you're lost in some of the detail. Like you're trying to make.
No, I'm not lost. I think you might be lost in my position. My position is this was a market structure trade. That was how I started the discussion with financial journalists placing this as a departed from fundamentals position. But the second part of this is that Adam Aaron has been a grifter from day one. You're a grifter, not a prudent executive, because you're talking out of both sides of your mouth. On one end, you're issuing, which you should be doing.
I understand.
Whenever
Victor,
you see your stock above.
I completely understand.
The second part of this is when you talk directly to the retail trader, which is what he was doing. He wasn't letting investor relations do this. He wasn't letting analysts do this. He was talking directly to the retail trader last time, and he's continued to do that, less so using social media and other outlets.
This has nothing to do.
And my point is, now that it's resurging, I've used every opportunity to speak to why that there's an issue there and a massive conflict of interest.
Hold on. This has nothing to do with him. Nobody cares about him. Nobody cares about.
That's my point. That nobody's talking about this, Tom.
I know, but nobody cares about
interest trade.
Nobody cares about him. Nobody cares about AMC.
I care about him. I care about this.
But you're taking this out of context. This is
in what way?
Because it's a $5 stock with 300% volatility or 450% volatility in the weeklies. So what happened this week was you had this very liquid, because it traded 350 or 400 million shares of stock. So it was just a roulette. It was a roulette game. And
do you think I'm new? I know what this week was. I'm not talking about what this week was. I know what the options were priced at. I know what the front month, back month, and out to 6 months.
Well, that was the whole game this week.
What I'm telling you is that the guy he insta-issued into this. And what I don't get is there's still apes out there. There's still channels on YouTube that are engagement farming this freaking story. There's still a narrative out there that you're fighting against some evil short sellers. There's still a narrative. There's still people that are playing into the populist, angry mob out there.
I don't think that's
easy to
tasty.
lean into these stupid algos. And my issue to you that I'm telling you is something nobody talks about. Why does this dude get a pass? Why does this dude get a pass with financial journalists?
Because
why
nobody
does this
cares.
dude get a pass amongst all these apes? What do you mean nobody cares?
It's a $4 stock. Nobody cares.
So if it's hold on, man. It's a $4 stock. First of all,
what's the market
you should
cap
be talking
of AMC?
market cap, not the price of a stock.
Fine,
what the hell
fine.
does it
What's the
matter
market
what
cap
the
of
price
AMC?
of a stock is?
$860 million.
It's a sub-billion-dollar company. Okay?
Correct.
It's $800 million right now, up from $600 million.
Massive conflicts of interest don't matter if you're sub $1 billion. What are you saying?
Yeah. Yeah, it doesn't matter. Nobody cares.
Fair enough.
They're a fraction of tasty. Do you think people care what we have to say? They don't. You know, there's a small group of people that care what we say because we talk about markets, but we're talking about a company that's a fraction of our size. Like, why are we talking about them? Who cares?
Correct. And I'll do it again. Every week I'll come on here and talk about what's interesting to me because I don't have to go with the goddamn crowd. I don't have to talk.
That's
what do you want me to do? Come in here. Hold on. What do you want me to come in here and talk about NVIDIA? You want me to talk about how SMCI is up another 15%?
I don't. No, you don't have to talk. You don't have to talk about NVIDIA. You don't have to talk about.
To me, it's much more interesting that this guy's been talking out of both sides of his damn mouth, and he completely got a pass from financial journalists. But on the other hand, there's a problem with people playing market structure and high volatility issues that makes them the idiot. Like there's a double standard here that I'm speaking to, Tom, and you want to tell me that nobody cares because it's a $900 million company?
No, hold on. Stop.
If it's a $900 million company.
It's not a double standard. There's just two different stories. It's not a double standard. The story number one is nobody cares about the CEO of AMC. He's already a nothing burger. Nobody gives a crap. The other story is we're retail investors taken advantage of by this entire, AMC, GMC. What?
I don't think so. No.
Of course. I don't think so either.
No, but here was my point, Tom, is the first time around when you've got massive ownership of a company, there was an opportunity to think of it as more than a market structure trade. And you can't tell me last time around that this was a pure gamma squeeze and then everybody sold and went home.
100% last time around, but I'm not going back 3 years. I don't care.
That's fair.
Yeah, last time around, sure. But where we are today, nobody gives a crap. That guy could be, he's faceless.
But he did this. He pulled the same playbook, which reminded me of it, which means I'm going to use the platform to spark an investigation, Thomas.
Victor, I didn't hear anything after you said to Sadna, brah. I mean, that's a big diss right there. I mean,
my bad. I think I dropped a couple F-bombs. Okay, you know what? Let's end on a lighter note. Thomas, the Chinese are currently operating 500 self-driving robo-taxis in China. Right now, as we speak, you can waive them with an app. Eunice Yoon did a piece on this in CNBC. They're expanding to 1,000 shortly. You can't get in there with young kids. You can't get in there with pregnant women or be a pregnant woman. Can't be elderly or have a bad heart. But other than that, if you meet all those conditions, you can hop into one of those 500 bad boys that are now expanding to 1,000. What do you think about that? Would you hop in one of those bad boys? You're getting chipped up. You got to be willing to get in one of these robo-taxis, yes?
Of course. I mean, as opposed to the taxi driver. Have you ever been in a taxi in Chicago? You're going to die in that taxi. In a taxi in New York City, you got a 50-50 chance of not getting in an accident. Yeah, sure, I'll take my chance at a robo-taxi, sure.
And I want you to answer Victor's question. Bro, do you think he's new?
What?
Bro, do you think he's new? Do you think he's new?
Bro.
That's what he said. Bro, whatever. Do you think he's new? Do you think he's new? Do you think he's new at this?
No.
Thank you.
But anyway,
you know how to get
the answer to your question, Victor, is I would not fly to China to get in a robo-taxi. But if there was a robo-taxi in Chicago, no problem at all.
Sold.
I'm actually thinking about doing it. Part of me wanted to ask you, will you send Garrett or somebody over here to do a little China run, hop in one of these bad boys? And
Well,
do a
how far
tasty-
could Singapore be
tasty
behind?
perspective. What do you mean?
I mean,
if the
Singapore-
technology's there, I mean,
Yeah, I mean, if the technology's in China, how
That's
far?
a good question. They got a robotic dog. I remember that during the pandemic. It was, there was this dog that was out in the parks telling people to safely distance from each other. I
I mean,
know if
they got
self-driving
robotic
taxi yet.
they got robotic delivery systems like going up and down the streets in LA. I mean, I've seen that all the time. I have no issue with that.
If the apps have a choice, by the way, I'm choosing the human driver every time. Protect humanity. That's my story, and I'm sticking to it. And the elite globalists like you can't get me off my square.
Well, hold
with
on.
you.
So first of all, number one is you probably don't even take many taxis. I guess
False. Next.
in Singapore you probably do, but in because nobody has cars, but in like places like Chicago, no, I'm just saying most people don't have cars in Singapore, I would assume, because it's so expensive. But in Chicago, where you drive everywhere, most people. I mean, when was the last time you take a taxi in Chicago? Taxi.
been forever.
25
taxi?
years?
Almost
No, not
never.
about that.
Almost never.
20,
Always
25
Uber.
years probably. So, I mean, Uber's right around the corner from going fully automated.
No way.
What do you mean, no way?
Fully automated
What
drivers?
is right around the corner?
Yeah.
What is right around the corner to you in time
Listen,
frame?
they're going to Airbnb it. It's going to be the same thing. People are going to say, hey, you know what? I can buy this car, set it all up, pay for everything, and then I'll get all my money back in a week, and I'll own the car for free for the rest of the month. That's what's going to happen.
That's what you think. That's what you think. But why would Tesla sell the car at the current price? I think the price goes up as soon as it drives itself, and you know that.
I'm not talking about Tesla. I'm just talking about cars in general. These aren't all Teslas, are they?
No, but that actually brings up a good point. Let me ask you this: China is making cars at ridiculously cheap prices.
Sure.
Okay. So if you're Joe Biden or you're any U.S. politician or European politician, at that, you've got a sort of a choice to make, right? Do you protect your homegrown auto industry with tariffs, which we've seen both on the Biden side as well as Trump have talked about tariffs to protect the auto industry? Or do you let the free markets win and import China vehicles at cost, which means you're talking about, potentially 15,000, 20,000.
It's not that simple. Because
I know it's not, but which of those binary choices?
I
do you
understand,
choose?
but it's not a binary choice like that because it has nothing to do with the auto industry exactly. The question is, do you let free markets? Do we operate in a global free market or do we not? Which means
Correct.
I'd be all for China to send all their cars, as many cars as they want over here and everything else, as long as we can sell things in China. And it's tit for tat type thing, one for one. So as long as we can do business in China, then I don't care if China does business in the US because we stand to gain more than we stand to lose because they have way more people. If
That's not what's going to happen.
If
That's
it's
not what it
only
is
they
today.
can send stuff to us and we can't do business with them, then it's not fair. Then you have to have tariffs. But it's not a question of cars. It's a question of business. And if the borders are open with respect to trade, then sure, of course if I was China, I would say, hey, you know what? You got to even it out. You got to beta weight the whole thing. But I mean, of course I'd be open to that. I want to see global trade expand dramatically. And in order to do that, you can't the problem with just doing tariffs without negotiating the right kind of deal is it's stupid. It's short-sighted and it doesn't help our economy. It doesn't help their economy. And not that we have an obligation to help their economy, but in order for our economy to grow, we have to go global. In order to go global, you'd have to make deals where it's two-sided. And that's all it is. I don't know if our politicians, I don't know what Biden thinks about that. And I already know what Trump thinks about that. And it's not a bright future, probably under either of those guys with respect to, how they're thinking about this. But we have to have open borders with respect to trade. Have to.
So if we have policies like we have in, California, I forget what the date is, but I think something like after 2030, you can't sell an ICE vehicle anymore. And you have a situation where the cheapest cars that are being made in the world aren't being sold here at the real cost. They're inflated due to like tariffs. Doesn't that effectively mean that the American consumer is going to get squeezed out of owning a vehicle at some level?
I doubt it.
Artificially inflated price.
I doubt it. That's just a scare. That's an old school scare tactic. Doesn't mean, I don't think there's any validity. This is where capitalism works, and this is where capitalism takes over. And actually, you're just making assumptions, but that's not how capitalism works. It's not.
Hey, I'm just asking the question.
I know, but free market capitalism doesn't work that way. If there's an opportunity, if there's a marketplace where there's an opportunity, and it's unrestricted, then that opportunity gets facilitated.
I don't disagree with you. I just think it's not unrestricted, and that's my point.
Well, that's different.
Like labor costs are not unrestricted. Selling goods across borders is not restricted. So that puts us in a position where we have to make trade-offs. And those trade-offs are sometimes difficult decisions. And so I'm asking you a question about trade-offs.
The risk,
I know what your values are.
The risk in China has a much greater risk than the U.S. I'll just leave it there. China has much greater risk at U.S. China's economy is far more fragile than U.S. and China has a much bigger hill to climb. So we're in a incredibly strong position with respect to China, not a weak position. We're in an incredibly strong position. We have all the cash. We have all the capital. And we have all the innovation. China's got a lot of catching up to do, and they got to figure out how to make their system work. And right now, it doesn't work.